Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to give another short update on what is happening in the overall markets, the stock markets, and also in the crypto markets currently, and give my opinion on what's happening in the short, medium, and also long term. And I think we should start with something interesting that Jerome Powell said in his last FOMC meeting. I think I'm gonna play the clip right now, what he said.
Happening with the economy and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
Other hidden tools to inject liquidity into the market. And maybe the market is also is thinking, what happens if inflation is still stubbornly high, plus the economy is breaking and falling into a recession and into a severe recession? What will the Fed do? And I think Jay Powell already hinted that they will, when this happens, they have no choice but to inject liquidity into the markets again. And that's, I think, like triggered some kind of psychological effect in investors who are currently sitting on a lot of cash and are thinking, oh, what if the Fed is slowing down the interest rate hikes in the next meeting, and or even pivoting? What should we do with all this cash? So they are already anticipating this and starting to move into, especially into gold and silver and other commodities. And I think doing this isn't a bad idea. I think now is a very good time to buy precious metals. Yeah, they could come down at some point because the Fed is over tightening and the economy is going into a recession. But even if that's happening, I think dollar cost averaging from now into precious metals is a very smart long-term strategy, because I think there is no chance, or the very limited chance, that the Federal Reserve and other central banks aren't pushing liquidity into the markets and decreasing interest rates again once we enter a severe recession, depression. And I think that's what they're gonna do. I think they're gonna inject so much liquidity into the market. And yeah, I think the end game is unfortunately some kind of hyperinflationary event. But when this is going to occur, no one really knows. So I'm not sure when this is going to happen. But I think what we will see is that the Fed is like they said themselves, is over tightening and pushing the economy or global economy into a severe recession. And to combat that recession at a later stage, they are going to pivot, and they're going to decrease interest rates once again. And at that point, it's going to be so obvious, even for the last investor, that it's all over. So at that point, there's going to be a massive confidence loss in central banks and also in governments, and people are fleeing left and right into tangible assets. But I'm not 100% sure how many years we have if this cycle is playing out. Um, this is like the longer term, but right now I'm expecting this smaller rally to fade once again, because the Dow once again hit this trend line, and I once again took a short position. I covered my other short position with nice profit. And once again, I took a short position right now at around 33,200 something, and with a stop loss at around 33,500, I think 512 or something. And yeah, if we consistently break this level of 33,500, yeah, then we have a shot that we have already seen the bottom. Like, I'm looking for a bottom, and I think we will see a bottom at some time in the next, I don't know, 2, 3, 4 weeks, sometime in December maybe. I think the psychology of the market is shifting more towards a bottom. But before we hit this temporary bottom, it's not like the final bottom, but before we hit this temporary bottom, there are some signs like this major trend line in the Dow that we still might have one last dump in the stock market, and we could see it with the CPI release this week. And if normally what happened is if we head strong into these CPI releases, the couple of last time we dumped hard, and the chances are high, in my opinion, that we once again dump after the release. I don't. If you ask me, I don't think that inflation came down more than the market is expecting. I think it's either it's like what the market expected, or it's coming even a little bit hotter than the market is expecting. And chances are high that we are dumping into this event. Not only this trend line is concerning, but also the VIX is like at a point where, in my opinion, it's looking like it's going to the upside again. And also the dollar, when I have a look at it, it looks like if it's not falling further under 108, I think we could have a reversal here. And also the euro to Australian dollar is looking like it wants to rally higher in this bull flag. And normally what has been in the past is, if the economy is slumping and we're heading into recession, or the stock market is declining, this pair is rallying to the upside, and vice versa. If the stock market is rising, this pair is heading down. And to me, from a chart technical point, it looks like a bull flag, and that this pair is heading to 158, 159 before resuming down. This gives me also like a hint that we still might have one more dump to the downside. We will see, and we have to we just have to look what happens with the CPI release. But this short that I took, I think there is still like good chances that we might see this dump, and that I'm still making some good profit. But if it's not working out, the loss is limited, so we have to see. Another thing that might be negative for the stock market is the current crash in the crypto market, especially the crash today was very violently. And like normally this crypto market and the stock markets are like highly correlated. and something broke today. The correlation broke. The stock markets went higher, but the crypto market had a really bad crash. So this correlation, like I said, broke today, and we have to see if if it's broken for a longer period of time, or if the correlation is getting going again. But normally, why this crash happened is like because these major exchange, FTX, had some liquidity problems. I think they just like yeah, they just created the Ponzi scheme and yeah, invested into like speculative projects, which they marked up at higher prices to increase their balance sheet. And now, when the prices come down, all these problems unveil. And yeah, like it seems like they have major liquidity problems. And the last time we had this was with Luna, and it took the markets down. The other exchange that came to the rescue is Binance now, and Binance made a letter of intent to buy FTX. But normally, with this letter of intent, is like it's stating, it's a letter of intent, and they can come like any problems in the next few days, and this deal can be cancelled, and yeah, FTX and Almeida can go bust, and take down the whole crypto market. And once this crypto carnage intensifies, it could also have effect on the broader economy, or on the broader stock exchange. Maybe not so much on the broader economy, but on the stock market, and push it down. That's it. That's what I just wanted to say. I just wanted to say that be careful. There might come another dump before the pump. And yeah, one more thing. This dump, when I look at the charts, it could go to the pre-COVID highs. For example, the Dow could go to 26 to 27K range. Normally, these levels, they act like a magnet, and in the Nasdaq, this area would be sub 10K, a little bit under 10K. Normally, there are high chances that this area is getting tested, that the market participants want to go there and test these areas. But I'm not sure if this is happening at this time, or after the strong bear market rally that I'm expecting, or after this bear market rally with a huge decline. But if you ask me, I'm tending to see this test of these levels in the Dow 26 to 27,000 area, and Nasdaq sub 10K before we see this bear market rally. So maybe by the end of December. Yeah, that's it, guys. I hope you like this video. See you in the next one. Bye, guys.